Joining us now is Gil Luria from D.A. Davidson. Gil, is this Meta thing really that bad? I mean, 8%, 8.5% seems like a lot to take off the top.
Not at all. Meta reported a great quarter. In fact, all three of these mega caps reported fantastic quarters that tell us how well we're doing. If we're to distill the signal from the noise, I'll focus on four numbers. Microsoft Azure, 39% from 37% last quarter. Google Cloud, 34% growth on 32% last quarter. They grew ads 15% from 12% last quarter. Meta grew ads 25% from 22% last quarter. All the main businesses are accelerating from very large bases. So these companies are all doing very well. What happened is Meta has traded at a big premium to Google for the last couple of years. Google has caught up. And in fact, as we look at the prices after hours, Google is now trading at a higher multiple than Meta for the first time in a while. People are excited about Google. They see it as the winner in AI. We think that that may be true, but Meta is going to be a winner. They're the only ones that provided guidance for next quarter. It was a little lower than people expected. That's what we're seeing after hours. But they just beat expectations significantly this quarter, even though they're comping an election quarter last year. So Meta is doing very well. They just guided a little lower than people expected.
These are both ad names. These are the two really huge ad names, and they're both using AI to try to improve their performance. From what you can see in their results, is that working? Is that a reason to believe, A, that they're going to continue to be dominant in their spaces, and then B, that regardless of what the working class consumer does, that the customers are going to need to use their platforms, Metas and Alphabets, to target the consumers that are spending?
Yes. Yes to all of those things. These companies are doing phenomenally well. That tells you the macro is stable. It tells you they are getting better and better at targeting the right ads, which allows them to charge more, and they're using AI to do it. Again, especially Meta. Meta gaining share, growing 25% in ads, Google 15%, very impressive, but Meta's the one gaining share because they're doing even better. They're both keeping the consumer in their apps. Really, the only threats are TikTok from ByteDance and OpenAI on the consumer side. Let's not forget, within the next 12 months, we expect OpenAI to turn on ads. That's going to take from both of them, but more from Google because it'll be more search ads. But right now, all they have to do is split the pie a little bit with ByteDance, and they're really splitting the rest of the pie. And again, Meta's still doing better than Google.
So, Gil, how does this set us up for Amazon tomorrow, especially the read-through that we're seeing from some of these cloud results today?
They better grow AWS more than 20%. If Azure and Google Cloud can accelerate to 39% and 34% respectively, if Amazon reports another 17.5% growth quarter, that will be very disappointing. It will mean that they're now losing share in a very significant way, and they need to fix that. Now, they do have Project Rainier coming online, where they're providing significant capacity for Anthropic's ramp. That should drive accelerating growth. It may not have caught the September quarter, but they better guide for it to help accelerate AWS growth. Otherwise, they will really be perceived as falling behind.